Hey, what's going on, everyone? Today's the 13th of August, 2024. I know you guys may have seen on YouTube a lot of people creating that content. The stock market crash has begun. We're about to hit this massive depression. We're about to hit this massive recession. People are going to lose their jobs. People portfolios, 401ks are going to go down to zero. All of the red thumbnail backgrounds, fear. Yeah, you're seeing that now. But then you look at this article from Yahoo Finance. Wall Street ends a wild and scary week, almost exactly where it began. Now, hold on. If you just leave your information, you're garnering and receiving information from YouTube content or traditional media, you would think that everything is crashing. But now you can see that Wall Street pretty much ended where it started a week ago. More tests loom next week, though. So am I telling you that we're out the woods right now? No. But what I'm telling you is that, yes, it's no problem ingesting and seeing and viewing other people's opinions, but also try to make sure it matches with what's actually going on. Because somebody is making money off of the content that they create. So even though you think they're doing it for the benefit of you and your understanding, no, more than likely, they're trying to get the bag. Because in the next 6 months, the content that they just created about this last previous move will be forgotten. And then they'll grab some other fanatical content to make sure that you click again. After a manic week that began with Japanese stocks falling to their worst loss since 1987 Black Monday. Yeah, that's how bad it was for some stock markets. Only for U.S. stocks to soar later to their best day since 2022. Slight gains on a Friday carried Wall Street almost exactly back to where it began the week. The SP 500 rose 0.5% to shave what had been a brutal loss for the week, down to barely a registrable 0.04%. The Dow Jones Industrial Average added 51 points, or a tenth, and the NASDAQ Composite climbed 0.5% as well. The gains pulled the SP 500 back within 5.7% of its all-time high set last month, after it has sunk nearly 10% below that record during the week. It was a vicious return of volatility, which people like because you can't make money without volatility. It was a vicious return of volatility for the market that has been rising smoothly, and a measure of fear on Wall Street briefly surged toward its highest level since 2020 COVID crash. It also may not be over. Worries are still high about the strength of the U.S. economy, and reports are due next week, talking about this week, on inflation, sales at retailers, and other measures of strength. But on Friday, at least, the mood was one of calm at the more big U.S. companies joined the pile, reporting better profit for the spring than analysts expected. Yeah, I think analysts get it wrong all the time. That's why they analyze. That's why they drop estimates, because they know that this is not an art or a science. It's just a guess off of information that we have at our disposal as of any particular moment in time. But here it is right here. This is the XPX, right? We did a price prediction back in the beginning of the year because Tom Lee, who works for Fundstrat, saying that we were going to make all-time highs in the S&P 500, and he was right. Like, after we did this video, we only had it making what, 5%. I think his target was up there around 5,200, which would have been 9%, and that occurred in Fundstrat, or his prediction occurred right here on March 20th, 2024. Congratulations to him, and also our price prediction. But now things has changed. Look at this. From the all-time high in the SP 500, the market is down at a low, was down almost 10%, right? But guess what? given this information, we can now create the buy zone into the market in SP500. This is where buyers stepped in. We appreciate them giving us these clues. Okay. So where buyers are. This is where sellers are into the market in SPX. So now we can put that on a chart. Okay. So this is that range as of right now. Even though we all can recognize that we're not out the woods yet, but look at last week. Look what happened last week. We saw the market in SP 500 open all the way down here around 5,100 points to close at 53.44. Look at that there. Somebody saw this as a buying opportunity. This is another buy zone. We're just going to mark the territory of where we see buyers and sellers. That's it. So as long as S&P 500 holds this buy zone, we know that there's a higher probability of price continuing to trend that direction, which is up. And as we approach this sell zone, we understand that the chances are increasing that price will also go down. Okay. Because looking at the weakness that occurred on the 4-day and on the 5-day charts, we're still there right here. And then right here on the 5-day. Okay. Here it is on the weekly right here. So to me, currently, this just looks like a reprieve, especially right here on the 2-weekly time frame. And here it is on the 5 weeks. So I'm not going to drop a price prediction yet. I want more information to come through for us to see how the market is perceiving the information, because currently they're perceiving it as a buying opportunity. But seeing it maybe hit 5,400 points on a 1% move, maybe even 5,500 to maybe 3% out of this move, I wouldn't be surprised. But outside of that, I think more people will become a little bit more nervous as to how high price can go in S&P 500. Okay. So I do think we're going to see higher prices, but like I said, let me go ahead and do this. We'll drop a prediction. We may just see our first target right there around 5,400 points. I say that because of this area right here. Okay. That would be my first target right around here. It's around 1%. And then the second target, let me see. We'll be around like 54.50. We do like just 2%. It's not going to be a lot. So we'll see what happens with that. All right, so let me add this one too, 55. That's it right there. Okay. So now go ahead and give me your thoughts. Make sure you maintain your profitability. And as always, trade different.